There's already vacancy and there's already people that are offering 2 months free to get into a rent. I mean, this is prime opportunity to be negotiating your lease.
There's over 900,000 apartments under construction and 440,000 are gonna hit the market in 2024. Which metro is building the most apartments? $1 trillion of apartment assets that need to be refinanced by the end of 2028. How many billions of dollars is currently at risk of being distressed in the multifamily sector? We're gonna find out where are these areas that these apartments are being built. If you live in one of these areas that these apartments are being built and the vacancy rate is high, you might just be able to renegotiate your lease. According to the globalists, distressed commercial real estate reaches a 10-year high. According to this, it says that the commercial real estate market is now on the brink of more and more distressed. $79.7 billion at the end of September. The balance of distressed property or distressed assets in the commercial real estate market climbed for the 5th consecutive quarter, totaling a total of $79 billion at the end of September. This figure includes both financial trouble and bank-owned assets. The interesting thing about this is it breaks it down into 3 different categories, from industrial, apartment complexes, and retail. All of this distressed property, the distressed apartment complexes, some people are seeing short sellers. They are shorting these companies that are buying apartments, or that they're seeing that the distress emerging in apartment complex because borrow costs are increasing. They're surging. The reason why is because the Fed has raised the Fed fund rate so high. The commercial real estate lending runs directly off of the Fed fund rate. Some of these projects have taken a year, 2 years to complete and finish. And when the Fed fund rate was to practically zero, and now it's increased to almost 5%, 5.25%, we're going to see a lot of more distress than the number that we see here. According to this article by Yahoo, $1 trillion of multifamily debt is due to mature through the end of 2028. And if this debt is due to recur, what you're going to see later on in this video, in some of these markets where vacancy rates have hit 10, or when they used to be 2%, now these vacancy rates at 10%, these people who have to refinance are gonna have a whole lot harder time to refinance if they don't have as high a vacancy. On top of that, in some of these markets, rents have had double-digit declines, which we'll get into that more later. It goes on further, and it says that they expect a great deal of pain in the multifamily because of the higher interest rate environment, and with a lot more supply hitting in 2024. Again, there are 440,000 units that are supposed to hit the market in the United States by the end of 2024. And some of these metros, you're going to be surprised because they are going to get hit. Some of them I didn't realize wouldn't get hit, or I don't think are going to get hit based off vacancy rate, but some of them are in for a rude awakening. They go on further and they say that the multifamily assets valued at more than $67 billion are potentially distressed. Part of this is because people were uneducated and they jumped into the real estate investment following the great Grant Cardone, although right now he's saying that opportunity is going to come because the commercial real estate market is going to get slammed. What they're saying is that people jumped in, they were unprofessional, didn't know the business, tried to jump into a big deal rather than starting with a small deal. They jumped with a big deal and all of a sudden they're in over their heads. They don't know how to manage the property and now they're in trouble. Part of it is because of that. But then you also see some of the big players like Lennar Corp, where they're unloading around 11,000 apartments. They're selling that off. Partly due because they had a $25 million loss in the first quarter of 2023, and then they had more than doubled the loss in the previous 3 months. So they've had a massive amount of declines or losses in the multifamily sector, and they're saying, listen, we got to unload 11,000 units. When you see people like this that are unloading, they're also saying that unprofessionals jumped in the business. Maybe they bought too high with speculation. And speaking of speculation, we have tools and a video in mind on how to show you how to tell if it's a good investment or a bad investment, how to break down, how does the cash flow, what are the expenses to expect. We want to know, do you want us to do it? We did a poll. We only got about 49 votes. Leave us a comment below and say, yes, we want to see that video. Getting back into this, what they're saying is among the markets that are softening, we have Boise, Idaho, Phoenix, Austin. These are among the markets that are softening in the commercial real estate world. And part of that is because rents have declined in these areas. If you've been following our channel, we've been following Boise closely, as well as we're looking at other areas, which you're going to see here in a moment. Boise, Phoenix, and Austin were among some of them in the Yahoo article. We decided to take this a step further and go deeper, because if these people are saying it, is that true? Is it true that we have 440,000 units coming to the U.S. market that are currently under construction in just 2024? And is it true that there's 900,000 apartments under construction that are going to hit the market by the end of 2025. And if that's true, where are they being built? With that being said, let's jump into some of this data. Part of the reason why some of these markets are softening is, according to this article from The Hill, that 55 out of the 100 cities had price declines. 17 of them were flat. Part of what they found when they did a survey is that they found that 29% of people were willing to move, and that is a drop from 34%. The migration or people moving are definitely slowing down. On top of that, they found that 75% of the Americans that moved recently regret that move. If they regret the move that they had, are they going to move back to the place they came from? If somebody moved from, let's say, Orange County, LA, San Diego, where they're used to sunshine and warmth, and they move to a place like Boise, where it's cold and there's snow and people don't know how to drive and there's wrecks, or there's inversions and bad air pollution when it's super cold outside. Some of those people didn't realize that when they moved here, and now are moving back to California. Migration cities like Boise could get hurt as people decide to move back. That's good news for you, because if you live in one of these metros that has a high amount of new construction and a high amount of vacancy, when it comes time to renew your lease, you are going to have the upper hand. I mean, how many of you guys are tired of landlords that just stuck it to you in the last 2 years, and now you get to stick it right back to them? Listen, either you drop your rent, or I'm going to move across the street, because there's that brand new apartment complex that has a lot more amenities, and I'm going to move there, and I'm going to save money. Unless you drop the rent, then I'll decide to stay. We have this competition within the multifamily world, within even the landlord world, where you see single families, people who bought with a low interest rate, putting their houses on the market because they can't make their payment and they couldn't move. So they throw their house on the market, and now they're trying to get somebody into their unit, as well as the apartment complexes that are being built and getting flooded. It's a very interesting predicament that people are in. For you who have maybe tired of the landlords, or the bad landlords, because there are some good, but tired of the bad landlords, now it's your turn to pay them back. Where are all of these apartments being built? The highest amount of inventory that's being built is in New York City. New York City also has the lowest vacancy rate. Let's just look at this. New York City currently has 650,000 units being built, or they're currently under construction. If we were to go to New York City and see exactly what their vacancy rate is, what you see is their vacancy rate is at 2.5%. So the probability that you're going to be able to renegotiate your rent on an apartment in New York City is very little, versus a place like Nashville. Nashville currently has 20,000 apartments that are currently under construction, but their vacancy rate is sitting at 10.8%. Now, what is a vacancy rate? Vacancy rate essentially means what percentage of the available units are sitting vacant in a year. So 10% is a massive amount of vacancy rate. If you live in an area like Nashville, there's a chance that you could renegotiate your rent and save quite a bit of money. Matter of fact, if you were to go around the area, you could probably find a place that is offering a first month rent free.
For instance, just like this apartment complex here in Boise. Right behind me, I'm in Harris Ranch here in Boise, and these apartments are currently under construction, but there's a handful of units that are available, and they're offering 2 months free rent if you move in here. That's right, 2 months free rent. So when you see an apartment listed at $1,600 a month, and they're offering 2 months rent, that really means you're getting almost $300 off a month. I mean, look at this. Even though the vacancy is high, if we were to go on and look at Zillow, you would see that there are many units available, and yet they are still building it like crazy. I mean, just look at this. So behind me are 2 plats that are approved to build more apartment complexes on, and they haven't even started. So you have this. And then you have this right behind me that's under construction. Now on this strip, not every single one of these buildings that look finished are finished. They're still finishing on the inside. And so right now, Boise is sitting at a 10% vacancy with 2,200 apartments under construction. That doesn't include the ones that haven't even started, like these plats behind me. So when these apartments behind me go on the market, and there's already vacancy, and there's already people that are offering 2 months free to get into a rent, I mean, this is prime opportunity to be negotiating your lease. But now remember, just because you live in an area that has a lot of construction like going on, like what's going on behind me, doesn't necessarily mean you're gonna be able to negotiate your lease. If you live in an area like New York City where there's 65,000 units being built, but there's only a 2% vacancy rate, it's gonna be a whole lot harder to negotiate versus a place like Austin, where it's the highest per capita of apartments being built and the vacancy rate's at 9%. On top of that, you look at Nashville, 9% again, vacancy rate, but it also has a lot of apartments under construction. So if you live in an area like those, you're gonna have a higher chance of negotiating your lease and getting a better price versus a place like New York, where it's only at a 2% vacancy rate.
Boise isn't even on the list. Let's see what some of these other areas are that are in the top. We're gonna use two different graphs we were pulling from different data sources. In this graph that we're using from Apartments List, from their research that they pulled, this is based off per capita. So they're gonna base this off of per capita, meaning for the 9.1, so there's 9.9 units being built per 1,000 people. And then how does that break down? Starting at number 6, we have Jacksonville, Florida. Jacksonville, Florida is sitting at around 13,400 units that are currently being under construction with a 9.8% vacancy rate. You jump next to the next one in line. We're sitting at Orlando with around 2.1 million population. They have almost 22,000 units that are currently under construction with a 9.8 vacancy rate. So imagine what happens when these units get finished, they get put on the market, and now all of a sudden, maybe this old apartment complex that was taking advantage of tenants is now going to be sitting vacant, as people are probably more willing to move into a new one, especially if it's the same price or cheaper. Number 4 coming in is North Carolina. Right now, they are sitting at 15,000 units currently under construction. They're at a 10.8 vacancy rate. So with 15,000 units coming on the market and a 10.8 vacancy rate, this vacancy rate is only going to go up as these new units come on the market and as people who bought are struggling and are going to put more houses on the market. Because let's go jump back to this chart from Apartment List. They have the highest single-family homes being built per capita. They're at 9.1. Again, this is based off of 1,000. So every 1,000 people that are living there, 9.1 single-family homes are being built per 1,000 people. North Carolina is sitting right around 1.4 million people. So there is a ton of new construction in single-family and apartments. When you add these together, well, they're going to be in for a world of hurt. Coming in next, we have Salt Lake City. Salt Lake City has around 7,400 units under construction, getting ready to hit the market in 2024. But what's very interesting about this is they've had the most price declines. Matter of fact, they're saying that they've seen a 13% drop year over year. That is a massive drop for rents. And can you imagine these apartment complex builders that started in 2021, because it takes around 1 to 2 years depending on how big the apartment complex is, and they started with a pro forma based off of 2021, and now all of a sudden they've had a 13% drop because the market has been a little bit shaky, and now they are going to have to figure out, how is this pro forma going to work? How are we going to get tenants in? We're going to have to drop our rent. They're going to have to calculate for that. Not all places are down. For instance, Denver is up 8% year over year. And Denver, matter of fact, and part of that is, well, Denver's vacancy rate is sitting at 7.8%. Now, what's interesting, and this is something that we're going to need to follow, is Denver has 30,000 units currently under construction. And if they have 30,000 units with a 7% interest rate, well, 30,000 units, if those all hit in this year of 2024, then I believe, and the data is going to show that this vacancy rate is probably going to increase, even though they've had price increases. The last two that we're going to look at, and some of them you might already know, is Austin, Texas. So Austin, Texas has a whopping 27,000 units coming on the market with a 9% vacancy rate. But Austin, Texas is a lot like North Carolina. What I mean by that is just look at this chart here. And let's just compare them to. So Austin has 8.4 per capita. So per capita, they're the third highest single family builder, but the number one multifamily builder. So when you put these two together and they collide with rents dropping, man, that's going to be, I am glad I'm not investing in Austin, Texas today, at least right now. Austin, Texas is down on rents year over year by 11%. That's crazy. And if it continues to decline as these new inventory comes on the market, as the new single family homes come on the market, man, Austin is getting ready to just blow up. Talk about a bubble. This is probably one of the biggest bubbles. Now, Nashville, Tennessee. This is something that was very surprising to me. Nashville has a 10.8 vacancy rate. Now, I think this is the highest vacancy rate that we're discussing today. And you add that on with the 21,000 units being built. Now, whoever lives in Nashville, be prepared. If you're going to renew or move in the next 6 months, you might have the best opportunity in Nashville with the vacancy rates as high as they are and the amount of units that are going to hit in 2024. But remember, going back to this graph, if you live in a place like New York, where the vacancy rate is down to 2%. So let's just look at this. New York, vacancy rate's at 2.5% with 65,000. So you're probably not going to see a huge decrease in prices. I mean, if anything, prices are probably going to increase. According to the Zumpers report, it did, matter of fact, did increase in New York and has a slow downward turn, probably due to seasonality. If you live in a metro that is not discussed today, the thing you have to look at is you got to look at the vacancy rate. You have to look at how many units are under construction in your area. And if your vacancy rate is high and your new construction number is high, or your vacancy rate's high period, then there's a good chance that you're going to be able to negotiate with your landlord a lot more.